morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks rise as traders boost bets on a December Fed cut following a subdued U.S. inflation report. Abu Dhabi's wealth fund says it will be rejigging its strategy as the $1 trillion fund looks to speed up deals. And we are still live at the COP29 climate conference in Baku with more conversations with the leaders gathering here. Linda-Eling Lee, head of the MSCI Sustainability Institute, joins me this hour. Well, it has just gone 8 a.m. across the Emirates. I'm Jumana Bersachi at the COP29 conference in Baku, Azerbaijan. This is day 4 for us, and yet another cracking lineup, if I can say so myself, coming out throughout the course of this show. We're with you for the next 2 hours. As ever, let's kick off the show, though, taking a look at how the markets are faring. All the focus yesterday was, well, on a couple of things, of course, on Trump's pick for the cabinet, but as well as that CPI print coming in line with expectations. Actually, a little bit of heat on a 3-month annualized basis. I'll get to that in a moment. But what we did see is more stalling in the stock market rally. So it's been a couple of days now where stock markets is sort of taking stock, so to speak, of the big run-up that we've had in the last couple of sessions. Today, futures not doing that much. We're leaning slightly towards the red for both the S&P and the NASDAQ. But then yen is in focus. Look where we are, just through 156, or very close to that level. This, as the dollar continues to pick up momentum, the yen losing versus the greenback has been a continual theme and continues to trade upwards in the absence of further hawkishness coming through from the Bank of Japan. So something to bear in mind that the Asian traders have been watching very closely as well. And then Bitcoin once again in focus, briefly topped $93,000 yesterday, another record high. Throughout the course of this week, we've been talking about all of the Trump trades that have been doing well. Higher yield, stronger dollar, Bitcoin, crypto continue to see a push. This is the picture for Bitcoin today. But for our terminal chart, let me just show you the picture for inflation. I touched on that. But essentially, if you go back and look at headline CPI and 3-month annualized basis, those rates are back above the 2% Fed target. So we are seeing somewhat of a stalling. That being said, despite the inflation data proving to be somewhat sticky, the front end of the curve actually dropped 5 basis points. So 2-year yields rallied 5 basis points. The 10-year went up. So we saw a bit of a steepening of the curve. The market is now pricing in about 80% of a chance of a December rate cut. But let's also check in on how markets in Asia are faring. Avril is in our Singapore studio standing by, and a bit of a mixed handover today from Asian markets. Avril, tell us more.
Well, Jumana, we're seeing Asia stocks, bonds, currencies mostly lower. I think it's still that continued repricing of Trump's win that's playing out in the markets, and that's despite traders seemingly more confident about a cut from the Fed come December. Most of Asia stocks are down, but you mentioned dollar yen a short while ago sitting just below the 160 handle. What's really interesting is how silent Japanese authorities have been, relatively speaking, in terms of verbal pushback on the yen weakness, though that seems to be helping. The Nikkei, you're seeing a bit of an outlier on a day where a lot of selling is going on. Another bright spot is in the form of Tencent after it posted pretty solid earnings growth, although there are some concerns about the earnings or the gaming side of the business as well as the fintech side of the business. But this is what you're seeing in Asia so far. Jumana.
Avril, thank you so much, as ever, for the overview. Well, let's talk more about the inflation data and the impact it's having on markets. U.S. inflation data out yesterday came in line with expectations, supporting the case for another Fed cut next month.
I think that the data that we got this morning is showing a continued disinflationary path.
We're a little bit too laissez-faire on inflation right now. If you look at the trend, the 3-month trend is moving back up.
Based on the CPI report and what we're seeing, the Fed will keep doing what they're doing.
Markets at this stage have only priced in 2 more rate cuts next year.
Have markets gotten ahead of themselves that the Fed is going to be slowing down cuts as soon as December or January? We think that they have, and we're likely going to deliver a December cut and probably January.
I expect another 5 cuts by next year, so 125 bips by the end of 2025.
You're starting to see some inflation rising already. Couple that with the fiscal policies that are out there, and I still think inflation is an issue the market is going to have to deal with in the coming months.
Well, lots of different opinions there about what the Fed should do. So for more analysis, let's bring in Haig Bathgate, Head of Investments at Atomos. Great to have you with us on the show. One thing that I was a bit surprised to see yesterday is even though the numbers came in line with expectations and actually on a 3-month annualized basis, slightly stickier, the front of the curve did actually rally. We saw 2-year yields rally about 5 basis points. The market is now centered on 80% probability of a December rate cut. What do you think is going on here?
Yeah, I think there's a lot of noise. I mean, obviously, there's a lot of base effect in terms of the data and how that impacts the year-on-year change in prices. I think at the moment everybody's trying to distill what's happened with the incoming Trump government. Is it going to be inflationary? That's the assumption of most people. Is it going to be deflationary? If we see big cuts to the government, that could actually be deflationary, which a lot of people haven't been predicting. And of course, the Fed is basically saying we'll wait until we see the data, and we'll only at that point make the decisions on the back of data. So I think it's going to continue to be noisy, but the general trend I think will continue to be down as we head in later this year and into next year too.
Yeah, I would say for the first 9 months of this year, most of our analysis on the show centered on what the Fed are going to do, when they're going to start cutting, where the U.S. economy is headed. And I just wonder, looking ahead to 2025, whether what's more relevant for markets is not necessarily what the Fed decide to do with the rate cutting cycle, but actually what happens on the fiscal side and how the new Trump administration pushes through with some of these fiscal plans. Would you agree with that?
Yeah, I think so. I think at the moment it's just very hard to make sense of what's going on. There's so many moving parts. It's hard to have a huge amount of confidence in what's going to happen in the future. The one thing we do know is that the fiscal changes, ultimately should be inflationary, and that has been the expectation, and that's been the narrative that we've had coming into this presidential election. But, as I was saying just there, there is a chance that some of these factors might not be quite as inflationary as we think. It's quite hard to push through, cuts in government, and there's been lots talked about that in the past few days. But some of these things could at the margin be deflationary. So I think we just have to wait and see.
Yeah. In terms of stock market performance, one of the big features of the last couple of sessions is a huge outperformance of U.S. stock markets versus global stock markets. Does that create a buying opportunity in markets ex the U.S., or do you expect this momentum to continue?
Yeah, so I think there's been a lot of euphoria in the stock market, particularly in the US, on the back of the US presidential election, and we've seen that gather momentum. And we do know that when these things start to gather momentum, the pods can push those trends, and we're seeing that in areas like Bitcoin as well. Yeah, look, I think there's a lot of value to be had in Asian stocks. If you look at it's almost been a divergent. You've seen the US market move sharply higher, and you've seen anything Asia or China related move lower, irrespective of whether they actually even export into the US. So I think Asia at the margin, we play this, the low risk way of playing this we do through Japan, but certainly China looks cheap on pretty much any metric now you use.
Interesting. Let me pick you up on that point. China looking cheap. Are you encouraged by the various measures that have been put through by authorities on the fiscal front? Do you think that there's more to come, or have they done enough?
Yeah, so I think there's been huge stimulus announced over the past few weeks, and obviously we had another announcement on Friday. I think it takes some time for those to feed through to the real economy, but we're generally enthused by this. We don't actually think that the outlook for China is as bad as it's sometimes purported in the Western media, and certainly the steps taken and the willingness by the authorities to stimulate the economy we see as a positive. And ultimately, these Chinese companies are incredibly cheap now. On a price earnings basis, if you look at some of these companies, they are trading on an incredibly cheap basis. And what's always surprising, to us, is that often when they're reporting numbers that are ahead of expectation, there's virtually no share price reaction. So it shows you that sentiment is heavily stacked against those companies.
Yeah, and which probably means that the bar is really low for a positive surprise, even geopolitically as well, given concerns about the relationship between U.S. and China. Final question to you. I was talking about it with my colleague Avril. We've seen a lot of downside pressure on the yen in the last couple of weeks. Even before the U.S. elections, that trend had started. What do you see as the outlook specifically for the yen, and how does it interact with the performance of the Nikkei?
Yeah, so look, I think there's growing consensus that there's going to be more intervention by the Bank of Japan at some point in the coming weeks, probably, and they're obviously very sensitive towards this. I mean, look, ultimately, if you have hedged your currency in yen, the returns that you would have had on the Japanese markets have not been nearly as appealing. I come from the UK, and we see the same thing when the currency is weak, the market's strong. So I think that we continue to see that sort of inverse correlation. Again, we're very positive in Japan at the moment. We think valuations look good, and ultimately we see this as a lower risk way to play the China theme, although we do that on a hedged basis.
Very clear. Well, great to have you on and listening to some of your big calls in these stock markets around the world. Atomos Head of Investments, Haig Bathgate. Thank you. And still ahead, we will be speaking to Linda-Eling Lee here at COP29. She is the head of the Sustainability Institute at MSCI. They have an interesting report out. We're going to talk about that. But first, Abu Dhabi's $1 trillion wealth fund gives Bloomberg rare insight into its shifting investment strategy. We'll discuss that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Baku still. Now, Abu Dhabi's $1 trillion wealth fund is shifting its investment strategy by embracing a more scientific approach to speed up decision-making and boost returns. In rare public comments to Bloomberg, the Abu Dhabi Investment Authority, ADIA, also revealed it's putting more money into private credit. So for more on this story, let's bring in Bloomberg's Nicolas Parisi in Dubai. He broke the story. Nicolas, so interesting to hear about some of these changes coming through. Walk us through what exactly they're doing and how they're changing their methodology.
Yeah, good morning, Jumana. So I think some 4 or 5 years ago, officials at the Abu Dhabi Investment Authority had realized that the investment landscape and markets had fundamentally changed. So they got together and started working on a series of reforms, which were wide-ranging, especially for this fund, which is about 50 years, almost 50 years old now, and is usually the prudent manager of the Emirates' vast oil wealth. So what they did is they created new departments, they merged a few, they also changed the way they measure their performance. But I think most eye-catching of all, they set up this science lab, and it's called the Quantitative Research and Development Department. And what they did is hire computer scientists, AI experts, academics, people with not your usual financial background. And the whole aim of all of this was to adopt a more science-driven approach and to be much faster and nimble in spotting market opportunities and then acting upon them.
Yeah. Let me just ask you, given you've run us through the different type of methodology that they're going to be using, the incorporation of artificial intelligence, more data scientific approach, how is that likely to influence their actual change in investment strategy?
Well, so once they spot these market opportunities, they should be able to seize upon it very, very quickly. And I think we're already seeing result of that, right? So according to some estimates, they've already spent $36 billion this year alongside the 2 other big Abu Dhabi wealth funds. So obviously, anytime a sovereign wealth fund of that size, it's close to $1 trillion in assets, makes a decision that reverberates across different asset classes across the globe. A few examples of this is obviously private credit, which we've seen. There's several high-profile deals in which they've been involved. Private equity as well, albeit from a low base, but they're more and more allocating money to these type of investment classes.
Yeah, super interesting. What does this shake up in their methodology tell us about Abu Dhabi as a financial hub and its play and its role in global financial markets?
Well, I think more than ever, Abu Dhabi is playing an outsized role in global markets, right? So again, due to decisions of these sovereign wealth funds, and it's not ADIA alone, they really have the potential to change global markets. Even the smallest allocation can make a huge difference. But more so than ever, it shows that Abu Dhabi has become an important financial hub in its own, and they're attracting all these big players. They're coming here, obviously, to court these sovereign wealth funds. So what we're seeing are the biggest investment banks in the world, asset managers, private equity funds, even family offices, all opening offices here to obviously to gain more proximity to these big wealth funds, including ADIA.
Yeah, so interesting. Thank you for bringing us that story. That was Bloomberg's Nicholas Parisi. Well, coming up, Saudi Arabia's sovereign wealth fund is selling part of its stake in the kingdom's main telecom company in a cash quest. We're live in Riyadh next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Baku. Saudi Arabia's sovereign wealth fund is selling part of its stake in the kingdom's main mobile phone operator as it tries to raise cash for $1 trillion economic transformation plan. Let's bring in Bloomberg's Christine Burke, who's in Riyadh for us, our Saudi bureau chief. Christine, good to have you with us. What kind of cash will this raise for the PIF, and how much of this is simply a cash-raising exercise for the Saudi and Saudi state government?
Well, good morning, Jumana. It's good to see you. I mean, we're talking about what could be a pretty significant haul for the Saudi sovereign wealth fund. So what the PIF is doing here is they're going to sell down a 2% stake in Saudi telecom giant STC. This equates to about 100 million shares and is expected to be a deal that will bring in about $1 billion in cash for the sovereign wealth fund. Now, it needs to be said that we cannot presume to know exactly why the PIF does what it does, but based on comments from the PIF itself and a lot of our recent reporting, we know that the PIF is looking to invest more in the domestic economy to really drive that Vision 2030 agenda to diversify the economy away from oil. And we know that one way that it has sought to raise cash is by selling down stakes in its portfolio companies. So perhaps that's exactly what we are seeing here. We also did get an announcement yesterday as well that the PIF sold shares in one of its key stakeholdings in Nintendo. The company, or rather, sorry, the sovereign wealth fund started selling down Nintendo shares back in August. It sold about 17 million shares over a 6-week period. And then we heard yesterday that they took its stake down further to about 6.3%. So again, while we can't say with 100% certainty that it's a cash grab to back Vision 2030, it certainly looks that way.
Yeah, it's super interesting, and also sort of echoes what the PIF governor was saying back at FII, and that they want to take their focus or shift their focus or percentage of allocation more towards domestic projects. Sticking with Saudi, though, NEOM has had some changes the last couple of days. Yesterday, we were talking about how they've replaced the CEO, but they've also received some funding for development, but from Italy. So tell us more.
Yeah, this is an interesting one, and this is a fresh scoop that we had from the team yesterday, and it is interesting because this is one of the rare cases that we're seeing of foreign backing for NEOM. Remember, NEOM is the biggest project in the Vision 2030 portfolio of projects. This is the crown jewel for Crown Prince Mohammed bin Salman. It's meant to have 12 different regions, from tourist destinations to smart vertical cities. I mean, it's a massive, massive development that requires a huge amount of capital. What sources have told us is that Italian export credit agency Sachet has agreed to guarantee $3 billion worth of loans for NEOM in order to back construction and development of the project. And it, again, you know, I mentioned that this is a rare case, but it's also interesting that it's coming from Italy. And what sources have said is that the hope here is that Italy will be able to move a bit closer to Saudi Arabia. Specifically, it's hoping that by backing these loans, by guaranteeing these loans, it will then pave the the way for more Italian developers to win work at NEOM. And we're talking about a ton of work. I mean, NEOM is a $1.5 trillion development, so a lot of potential work to be done. And we're also told that the Italian Prime Minister is planning to possibly visit Saudi Arabia as soon as next month. So that really underscores that this deal could be geared towards a broader deepening of the relationship.
Interesting. Yeah, definitely interesting to bring up the Italian angle and also the opportunity it presents for Italian companies to get involved in construction and infrastructure projects in Saudi Arabia. Final point, since we have you with us, Christine. So the Saudi Arabian government issued a bond denominated in yuan. Tell us more about the bond that was issued.
So this is exactly what happened. China issued a dollar bond and they sold that dollar bond in Saudi Arabia. This story is interesting for so many reasons, Jumana. But the first thing to say is that this was a sovereign bond that came from the Chinese Ministry of Finance. It was a $2 billion bond and they decided to sell that bond in Riyadh. Now, from the China perspective, it's interesting because this bond, which was meant to be $2 billion, and it was $2 billion, it drew in orders worth more than $40 billion. And now, as it has started trading today, we're seeing that bond is drawing in lower yields than U.S. Treasury. So from a China perspective, it's interesting. The big question, though, is why Riyadh? I mean, this was the first Chinese dollar bond sale since 2021, and China would usually go to markets like London, New York, or Hong Kong versus Riyadh. So you do have to ask yourself the question, why would they take this bond offering here to the Saudi market? And I think there's only one real clear answer, and that is that Saudi and China are deepening their relationship. We know that the two sides met earlier this year to discuss ways to further collaboration. And so perhaps this is a part of that. I mean, it really does look like a vote of confidence for Saudi Arabia in particular. Saudi and China have been cooperating more deeply as well in the petrochemical sector, also in steel manufacturing and in renewable energy. Another key development, too, has been in capital markets. So just last month, we saw an ETF that tracks Chinese shares starting to trade here in the Saudi market. So really, this goes back to the deepening China relationship with Saudi.
Yeah, we spoke to the Hong Kong Stock Exchange CEO at the time at FII on the week that ETF started trading. So yes, it definitely speaks to the deepening relationships. And also apologies to viewers, because when I asked Christine the question, I meant to say they issued a dollar bonds, not a yuan denominated bond. But thankfully Christine was there to correct me. Bloomberg's Christine Burke in Riyadh. Now for a look at some of the other stories that we're following this morning. Turkey has been invited to become a partner of the BRICS group, an offer that falls short of its expectation of being granted full membership. The NATO member country asked to join earlier this year to increase its global influence and forge new ties beyond its traditional Western allies. BRICS has added several new members this year, including Iran, UAE, Ethiopia, and Egypt, without requiring a transition period. Well, coming up at day 4 of the COP29 Climate Summit, we'll be speaking to Linda-Eling Lee, head of the Sustainability Institute at MSCI next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks rise as traders boost bets on a December Fed cut following a subdued U.S. inflation report. We are live at the COP29 Climate Conference in Baku with more conversations with the leaders gathering here, and Linda-Eling Lee, head of the MSCI Sustainability Institute, joins me in a few moments. And Mali is demanding Australia's Resolute Mining pay about $160 million after the government detained the company's CEO. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi at the COP29 conference in Baku, Azerbaijan, our 4th day here. Let's take a look at how markets have fared. And as you were speaking about earlier on in the show, some of that rally has started to fizzle out, or at least has stalled in the last couple of trading sessions. What we've seen is moderately positive gains for the major indices, but of course coming off record highs. It's been quite the run. Today we've got S&P and NASDAQ futures leaning towards the red, but perhaps less so than they were about half an hour ago. picking up on some of the positive momentum that's coming through from some of these Asian markets, including in the Nikkei. We'll talk about that shortly. But speaking of the Nikkei, take a look at where the yen is trading, 156 right now, so has continued to weaken versus the greenback. And to pick up on what Avro was saying earlier on in the show, there hasn't been so much in the way of official commentary coming through from Japanese authorities vis-a-vis the weakness of the yen. Typically, they try to jawbone at this stage. They have done nothing as of yet, so 0.4% weaker. And then also a look at Bitcoin, because the crypto trades have done extremely well into and out of the U.S. election, sitting just shy of $90,000. We briefly topped $93,000 yesterday, an all-time record high. Switching over to our terminal chart of the day, the focus for markets yesterday was on that inflation data. And here's something that I thought was quite interesting. Even though the headline and core came in line with expectations, if you look at it on a 3-month basis, so 3-month annualized, core and headline has actually still showed a surprise to the upside. So it is above the Fed's target rate of 2% for inflation, showing that there is some stickiness still in this inflation data. All right, let's check in on how markets in Asia are faring as well. Avril is in our Singapore studio. Avril, I ate a little bit into your lunch by talking about some of the price action in the yen, but just give us an overview of what else is driving some of these Asian markets right now.
Yeah, we're seeing Asia stocks down today, but to your point about what we're seeing among the Trump trades and how the greenback has just been marching higher. Look at how it's playing out on Asia currencies today. It's really getting hard hit. You look at the Bloomberg Asia Dollar Index, which gauges Asia currencies, excluding Japan, of course, it's at the lowest level since at least late July. So it really gives you a sense of these currencies that are on the back foot, particularly the ones in Asia that have economies that are closely reliant on trade or tied to the Chinese currency in terms of sensitivity. Some of our colleagues have been writing on the MLive blog talking about how the Thai baht is still relatively overvalued on a trade-weighted basis. So that could make it really vulnerable. The Malaysian ringgit is really weakening today. So this gives you a sense of what we're seeing on FX. But to your point about dollar yen sitting above 156 now, and how we haven't really heard much in the way of intervention verbally from Japanese authorities, something to keep in mind is that when we got that weakness in July, that was a bit of an outlier on the Japanese currency. This time around, all the Asia currencies are weakening. So that gives you a sense of why we might not have heard anything from these Japanese authorities of late. Jumana.
Yeah, interesting. It's systemic rather than idiosyncratic in that situation. Avril, thank you so much, as ever. Avril Hung in Singapore. Well, the COP29 climate summit in Azerbaijan has been dubbed the, quote, finance COP, where world leaders are working towards a deal to fund the battle against climate change. Crucially, the summit may see agreements on public-private partnerships to de-risk investments and make it easier for private capital to be allocated to sustainable finance projects. So for more on this, more on this and more, I'm pleased to be joined by Linda-Eling Lee, Head of Sustainability Institute at MSCI here at COP29. Wonderful to have you with us. Financing, obviously, a key focus here, but I also just want to go back to emissions and what has been happening in that front. You have many agencies warning that this is on track to be the warmest year ever. MSCI, you've put together a report assessing the pace of climate progress by listed companies in 16 industrialized and emerging market nations, and I thought the findings were pretty remarkable. 62% of listed companies are on an emissions trajectory that would warm to greater than 2 degrees Celsius. Does this just tell you that the Paris goals are not achievable?
Well, let me start by thanking you for having me today, because today is actually Finance Day at COP, and I think it's very important to acknowledge that a dedicated day for finance, because the private financial institutions are playing a larger and larger role. And one reason is because the portfolios that they have, the companies in their portfolios, actually have to play a much larger role to help us reach the climate goals. So as you said, our Net Zero Tracker report does show that the world's listed companies do contribute about 20% to global emissions. Privately listed companies that are held in the private equity and private credit and infrastructure funds actually add another 12 to 15%. So that's a very significant part of the global emissions picture. as you said, 62% of them currently are on track to be above the 2-degree mark. And that is why many of the financial institutions that we serve are here today in Baku, really to try to work out what it is that needs to happen in order to help finance those parts of their portfolios to actually decarbonize much faster.
Yeah, and the other thing that I noticed is the geographic location of the companies that are the worst offenders, so to speak. And what really stuck out to me from that report is the companies that are flagged out for emitting the most are based in India and in China.
Yes. So that has been a change. So when the Paris Agreement was signed and we looked at the world's publicly listed companies and their emissions, actually the majority of the emissions were coming from developed market companies. And those companies actually over time in the developed markets have actually been decarbonizing at a fairly significant rate. I mean, U.S. companies, for example, on average have decreased their emissions by about 3.5% or more every year since the Paris Agreement. But today, that means that the picture is quite different because in the meantime, emissions from emerging market companies have continued to rise. And so now they make up the majority of the emissions that are actually being put out in the world from listed companies.
Yeah, which I guess sparks so many different angles for the debate, including China and its role in providing financing, given its Finance Day. But let me just bring up also another aspect of the report that stood out to me. On climate finance, you say that 3/4 of the investments made by climate-focused investment strategies are in the U.S. So 72% of investments are just going into the United States. What does that tell you about the rest of the world's ability to attract and obtain the financing that is necessary for the transition, if most of it's going to America anyway?
It's absolutely the crux of the issue here. So there is actually climate finance flowing from the private sector. In fact, that's one of the fastest growing categories in terms of the kind of funds that we're looking at. So climate funds now make up over $500 billion worth, and over 72% of the investments are actually in portfolio companies that are in the U.S., and only about 10% are going to emerging markets. We also see the same pattern actually in terms of capital raises. So since the Paris Agreement, the money that's been raised for really usually from publicly listed for listed bonds as well as IPOs. Half of that has been going to emerging markets, and most of that is actually to China. It's only 2% that is going to emerging markets that are outside of the G20. So there's this huge discrepancy between where the emissions are actually and where funding is going to.
Why do you think that's the case? Is it because the U.S. is deemed to be less risky from a public risk perspective, or is it because of, say, some of the incentives that were put in place by the outgoing Biden administration with the Inflation Reduction Act?
Well, I think in terms of investment flows into these different countries, especially kind of in emerging markets, they face the same kind of macroeconomic headwinds as any other kind of financing, not just climate financing. So I think that's one thing that is a hurdle to get over. But the other is actually sort of the policies that have been put in place in order to attract more climate finance in the U.S. And I think that's one of the things that financial institutions are really looking for as a signal here at COP. Is it's not just that they want to see countries raise their ambition. That's one of the goals of the delegates here. But what they really need to see are some clearer policy signals in each of the markets and each of the governments to actually be looking at on a sector-by-sector basis, what's that pathway and what are the enabling policies that they're going to actually put into place? Because, financial institutions we work with are very interested in actually the opportunities of financing the energy transition, but the pace is so different between different markets and in different, sectors in terms of their rates of adoption and technological uptake, that they really need to be able to find those enabling policies to make this work.
Yeah, good place to leave it. Thank you so much for joining us today on the show. That was Linda-Eling Lee, Head of Sustainability Institute at the MSCI, talking through some of the key findings of a report they put out around COP29. Now, coming up, Delivery Hero is planning a mega Dubai IPO of its Middle Eastern unit. We speak to the Talabat CEO next about their future expansion plans. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Baku. Well, Delivery Hero has unveiled plans to list its Talabat unit in Dubai in what could be amongst the region's biggest offerings this year. The IPO could raise about $1 billion and value Talabat at up to $12 billion, including debt. Talabat is also looking to diversify beyond its core business of food and grocery delivery into healthcare, beauty, and fintech. Joining us now, I'm very pleased to say, is Talabat CEO Tomaso Rodriguez. Good to have you with us. Talk us through the timing of this listing. Why did it make sense for you to come to market now?
Thank you, Jomana, for having me. So look, Talabat is a company that's been around for 20 years. We're a local company. We were born in Kuwait in 2004. And since then, we expanded in 8 markets across the GCC, Egypt, Jordan, and Iraq. 119,000 riders, 65,000 partners, and more than 6 million active customers. And I think now is the right time for us to open up and get a good mix of both local and international investors.
Well, Delivery Hero, the parent company, their investors have been asking and waiting to see the company actually turn a profit. I just wonder if you could give us any guidance regionally when Talabat itself is expected to turn a profit.
Well, Talabat is actually a profitable company since many years. And, in terms of free cash flow profitability, we have around 7% free cash flow already in 2023. And as of adjusted net profit margin, also 4.2%, right? So I think we've been profitable since a long time.
Yeah, that's why it makes sense, I guess, to IPO. Can you give us an idea on what you're thinking with your expansion plans? What are your plans for growth for the future?
So we operate in the markets we operate in. We still have a massive headroom when it comes to food, right? We have 6 million active customers, but actually we operate in countries with 180 million plus population, right? Of which we define addressable 71 million. So still a lot to do on the food side. We also have a grocery and retail vertical that we're very focused on. And we do around 1.2 billion in terms of GMV when it comes to groceries. But that's still about only 1% of the offline grocery market. And our grocery vertical is growing between 60 to 80% on a CAGR basis between 21 and 23. So there's a lot to do there too. On top of these things, we're focusing on things like fintech. We have a postpaid product that is growing very well. We also have a subscription product across all our ecosystem. And I think also expansion into new verticals like health and pharma and beauty and the pet care. I think these will be areas of expansions for the future.
Yeah, I just wonder how exactly the strategy is going to be catered towards the GCC market, because it is quite a fragmented market. How do you think about penetrating different countries within the GCC?
Look, at the point in time we're at right now, we believe every dollar we invest to grow and go deeper in the markets we're in gets us a better return. Talabat is the #1 leader in every single market we operate in. And also we are very far from #2. In every country we operate in, we're roughly 3 to 10 times the size than the second player in the market. And so we believe that keep building into our ecosystem and going deeper in every single market we're in gives us much better returns than expanding into new geographies as of now. We are in 8 countries, but still, I think in the future, if that creates more shareholder values, we're always open to expansion opportunities geographically.
Yeah. How are you viewing the competition? Meituan, Chinese company, has figured out how to deliver very efficiently within the Saudi market. What do you think is Talabat's competitive advantage?
So look, I think this business comes with network effects, right? So the more you grow, the better and more efficient your whole system becomes, right? The more restaurants you get, the more customers you get, and the more orders you place, the more riders you get, and the more riders you have on the ground, the fleet becomes more efficient and less costly, etc. But on top of that, I think what really matters in this industry is like choice, experience, and affordability, right? I think in terms of choice, we have the largest choice on the ground. In terms of experience, we have the largest fleet, so the most reliable fleet. But also in terms of affordability, I think all our partners see Talabat as a fantastic way to grow. And that's why they've been investing a lot of money in terms of discounts and affordability. And in the last 12 months, more than $400 million in terms of discounts and affordability were paid by our partners into the Talabat ecosystem. That's why we've seen historically that any player that tried to enter with an affordability angle was not able to penetrate or gain any significant market share because of that reach and the wide assortment of affordability that we already have on the platform.
Yeah. And just to round up the discussion, since we have you here, what is your view of acquisitions and bolt-ons to help further with your expansion plans?
We always are open to M&A opportunities. As of next year, we're closing the purchase of InstaShop. So InstaShop is a fantastic love brand in the UAE and Egypt. It comes with a $500 million GMV as of 2023, and also profitable on an EBITDA level. We're extremely excited about the synergies that we can drive between the two brands in terms of choice and experience for our customers. And of course, we remain always open to other opportunities in the next few years, of course, if that creates value for the company.
Brilliant. So great to have you with us. And let's see how the IPO goes in the next few weeks. Tomaso Rodriguez, Talabat CEO, thank you so much for joining us. We appreciate your time. Well, coming up, gold miner Resolute facing a $160 million demand from Mali's government after the CEO was detained. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Baku. Well, Resolute Mining has halted trading pending an announcement by the company with respect to recent media speculation. Bloomberg's been told that Mali is demanding Australia's Resolute Mining pay about $160 million to resolve a tax dispute after detaining the gold producer's chief executive, Terry Holohan. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. What a story, Jen. How did we get to this current situation?
Right, and Jumana, I mean, as you were just mentioning, it's clearly escalating and happening quite quickly. Listen, you just mentioned that we did see trading halted by Resolute, and what they're saying is that is pending a further announcement, considering there's been a lot of speculation about what exactly is going on. So just to give you some background on this, you mentioned that figure that the junta there in Mali is demanding, and what they're saying is that there was a sector-wide audit, and the company owes back taxes, essentially. And so this is coming at the same time, of course, that we have seen gold prices continue to rise. I mean, right now they've pulled back slightly over the past few sessions. But still, we're seeing a number of these juntas across West Africa trying to get a bigger stake in some of these mining operations. We should note that Resolute is one of among a number of other companies that operate mining projects across the region. And what we've seen from Mali in recent years is that they've revised their tax code in order for them to get more economic benefits from some of these increases that we've seen with commodities and in particular gold. And so it appears that this has really just come to a head considering the recent detention of these executives. And we should note it is not the first time that we have seen this. I mean, this continues to be something that a lot of multinationals are paying close attention to, especially again as you see this happening as commodity prices continue to increase and as some of these companies are making more money as a result.
And what is at stake for Mali if the situation continues any longer? I mean, clearly the uncertainty is going to be weighing on sentiment, but it's going to have economic implications as well.
Of course, and if you take a look at what we've seen just at this point from the share price of Resolute, again, we should note that trading has been halted. But since this news over the weekend, the share price has dropped about 40% just in the trading session today. Since the halt had been announced, we had seen the stock drop almost 8%. So yes, there are economic benefits, but also, I mean, hundreds of millions of dollars these companies are operating these mining projects across the region. And so potentially, do we see unease creeping into some of these investors who are there? And it's not just that. I mean, potentially then we see more firms and more of these military-led governments rethinking what some of these decades-long agreements have been. We should note that Mali is not the only country where this has happened, where renegotiations of the mining tax code have happened. We've also seen it happening in Burkina Faso, Niger. We've seen Senegal and Ivory Coast trying to rethink some of these shared profits from some of these mining operations need to be rethought. And so, yeah, this could potentially be economically significant for the sector, for the countries. But then also we should think about the humanitarian situation, right? Of course, because this puts some people in a precarious situation that they may not have anticipated. But we are following this story very closely because it does have benefits and could reverberate across industries and the continent more broadly.
Yeah. Bloomberg's Jennifer Zabazaja, thank you. And we will link back to you in just a few minutes. Before we do that, though, a quick look at futures and how equity markets are faring on back of those CPI numbers coming in line with expectations. Futures not doing that much, but European markets inching towards the green as we head into the open. But that is it for our first hour of Horizons Middle East and Africa. I'm Joanna Versace in Baku. Stay with us for the second hour as Jen joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks rise as traders boost bets on a December Fed cut following a subdued U.S. inflation report. Donald Trump wins the Republican trifecta, holding on to a narrow majority in the House. Meantime, there are reports Israel is rushing to advance a ceasefire deal in Lebanon as a, quote, gift to the U.S. president-elect. And Somaliland votes as the breakaway region, hopes the new U.S. administration will support its campaign to gain formal recognition. Good morning again, everybody. It's just gone 9 a.m. across the Emirates. I am Joanna Versace at the COP29 conference in Baku, Azerbaijan.
Yeah, busy week for you, Jumana. Great work out there. And I'm Jennifer Zabasaja in Johannesburg, where it's just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Well, so much that we've been talking about the climate and the progress with the climate agenda. But the focus for markets the last 24 hours has been on that inflation print. So let's just take a look at how some of the key assets are trading. We saw somewhat of a stalling momentum with that strong stock market rally that has been in play ever since the U.S. election results. Right now, we've got both the S&P and NASDAQ futures dipping slightly into the red. A lot of strength coming through on the USD, though. We see that versus the yen trading just above 156 now. So the yen weakness continues versus the USD. And in fact, the dollar is trading at its strongest level since 2022. So again, that tells you a lot about what traders are pricing in and expecting vis-a-vis the second Trump administration. The takeaway is that it will be good for stock markets, good for the USD, and probably continue to exert some upward pressure on yields, which has been the dominant play in markets. The other dominant play has been a renewed interest in crypto. We've got Bitcoin now trading through $90,000. We briefly touched $93,000 in yesterday's session at an all-time record high. So all of the Trump trades, so to speak, continue to perform quite well in trading.
Yeah, that's right, Giovanna. And let's continue on the markets. Traders are increasing bets that the Fed will cut interest rates by another quarter point in December after U.S. inflation data came in as expected. For more, let's bring in our MLive executive editor, Mark Cudmore. So, Mark, it was Neil Kashkari saying that only an inflation print that we weren't expecting could derail this cut. I mean, what other certainties did this print give us potentially for the path ahead?
I think there are a few takeaways. I think, first of all, this was an print that came in line. It is still a high enough number, but it was in line with expectations. And yet initially we saw the front-end yields drop. And that showed that the whisper number out there was for a higher print. And this is a reminder that this CPI print was for last month. It was before the election. It doesn't yet incorporate the plans of the new administration. And it was an extra reminder that, yes, we probably are going to go ahead with the December cut. Because even though there are many potential kind of shock policies coming through from the Trump administration, Donald Trump doesn't get inaugurated until January. So we're still a couple of months away, which means the Fed needs to wait and see what's actually delivered on the policy front. In the interim, they're going with the kind of prior assessment that the labor market is weakening, inflation is slightly under control. I think that analysis is probably most vulnerable from the latter point. Even before Trump's policies, it does seem that inflation is still quite sticky and potentially on the hotter end.
Yeah, we were pointing that out with our terminal chart this morning. The 3-month annualized number is still sitting quite sticky and above 2%, the Fed's inflation target. Mark, let me ask you about the dollar. It seems like we're back to dollar is king environment again. USD at the strongest level since 2022. Does that trade have legs? So what is the investment community saying?
My big worry is that the investment community is completely consensus in this. I think that the bullish dollar trade is perceived as one of the cleanest Trump plays beyond crypto markets. And I think there's very much an assessment right now that U.S. policies will be good for U.S. growth. They'll be good for U.S. growth at the expense of world growth. It'll kind of persist the American exceptionalism theme that we've been trading for pretty much the last 15 years. There'll also be inflation. It'll lead to more rate hikes. I am worried that A, this is completely consensus in markets and therefore largely priced, and B, we're kind of not being very nuanced in our analysis. Sure, rates will go higher, but rates will go higher because there's a real inflation threat there, and real yields may actually be under threat, which is not good for long-term dollar gains. And the second part of the analysis is, I think the assumption that tariffs won't be very damaging for U.S. growth, when we know they'll be damaging for global growth, may be a little bit too unsubtle. So I think that at the moment, the dollar trade still seems to have momentum. It doesn't seem any point to kind of stand in front of the runaway freight train at the moment. But I would suspect that this is a theme that is at least in the final innings. Now, whether that final innings is days, weeks, or months, at the moment, I have no conviction.
Interesting. All right, well, let's see what happens with the USD. MLive executive editor Mark Cudmore, thank you. On to politics now. Republicans have held on to their narrow majority in the U.S. House, giving President-elect Donald Trump and his party unified control of the government. Trump also returned to the White House for the first time since his chaotic departure 4 years ago to discuss the transition with President Biden.
Politics is tough, and it's in many cases not a very nice world, but it is a nice world today, and I appreciate very much a transition that's so smooth. It'll be as smooth as it can get, and I very much appreciate that, Jill.
For more, let's bring in senior editor Bill Ferries. Bill, so it's a red sweep. Republicans have retained control of the House. What does that mean for Trump's policies looking ahead? And also, how is it likely to impact him plucking several House members for his administration?
Yeah, well, you always want to have both houses of government on your side, of course. So that will prevent the Democrats from having a lot of leverage, particularly in the House, to pursue investigations, to block Trump's agenda, to set the agenda in federal spending. That said, as you mentioned, we already know, I think, 3 House members, Republican House members, who are being picked for Trump's administration. One of them, Florida Congressman Matt Gaetz, has already resigned. The other 2 may stay in to see how they do through the confirmation process. But we're looking at a Republican lead of maybe 3, 4, I think at the high end, 5 seats at the most. And if you take 3 of those away, it's almost a dead even. I think this just gives headaches to Mike Johnson, the incoming speaker. It's going to make it a lot harder for him to just keep the Republican caucus unified. He's going to have to do that for a lot of pieces of President Trump's legislation. He will not be able to count on Democratic support for anything. So if you lose a member who's sick, if you have someone who's on vacation, I think 3 members of Congress passed in the last term. There's a lot of reasons why you don't have a majority. Mike Johnson's going to have to fight very hard just to sustain that on very controversial votes.
Yeah, and Bill, I mean, just on the controversial factor, I mean, we have been seeing the president-elect very quickly make up some said controversial picks for his team. I mean, when we think about the Senate and confirmations of some of these people that have been nominated, I think the latest was Matt Gaetz. I mean, can some of these selections really win confirmation?
It's a huge question now, and something Republicans on Capitol Hill, particularly in the Senate, are going to grapple with. There are definitely some picks that make some Republicans very nervous. Among those, Matt Gaetz for Attorney General, Pete Hegseth for the Pentagon Secretary, and even Tulsi Gabbard for Director of National Intelligence. Republicans are going to have to decide whether, if those people actually make it to the confirmation hearing, whether they're going to buck the president and vote against them. Typically what happens under other administrations is that the White House is told, listen, this person is not going to get through the vote process, and the president then withdraws them and replaces them. That happened to President Trump 3 times in his first term. This time, I wouldn't be surprised if President Trump just dares the Senate to reject his picks. And then if you're a senator who voted against one of his nominees, you could face the full wrath of the Trump and Elon Musk Twitter accounts. And that's not something to discount if you're facing re-election.
Yeah, it's fascinating how Senior Editor Bill Ferries, thanks so much for the update there in Singapore for us. Now let's pivot to the Middle East. A close aide to Israeli Prime Minister Benjamin Netanyahu has reportedly told President-elect Donald Trump that Israel is rushing to advance a ceasefire deal in Lebanon. The Washington Post says Minister of Strategic Affairs Ron Dermer visited Trump's Mar-a-Lago compound last weekend before going to the White House. Let's get more from Bloomberg's Paul Wallace. So, Paul, what more do we know about this reporting, especially considering a lot of the conflicting reports that we are getting?
Hi, Jennifer. I think it's certainly the case that Israel would like, if it can get its political objectives achieved, to get some kind of ceasefire or end the fighting in Lebanon. There seems more urgency in Israel, both its government and among its public, to wrap things up in Lebanon than there is to wrap things up in Gaza. From what we're hearing, Israel wants a truce in Lebanon, regardless of who's in the White House. It is possible that if it achieves that if it manages to get what it wants from Hezbollah and the Lebanese government, that it will portray it as something that is either a gift to Trump, as this story suggested, or something that Trump achieved simply by being re-elected and even before getting into power. But the fact is, the IDF is somewhat stretched in Lebanon. It is suffering some losses. The economy is under a lot of strain too. So all things being equal, it is in Israel's interest to try and wrap things up. I do have to say, though, that there are still plenty of obstacles to achieving a truce in Lebanon. Israel wants Hezbollah to move to the Litani River, which is about 10-15 kilometers from the Israel border, and Israel wants to have the right to continue striking in Lebanon if it feels that Hezbollah is breaking the rules of any truce. those are big obstacles to overcome, and there's no guarantee that we'll see a ceasefire in Lebanon anytime soon.
Bloomberg's Paul Wallace, thank you so much for the reporting and analysis as ever. Well, still ahead, we talked to Andrew Fortescue, it's actually Andrew Forrest, Fortescue chairman, as part of our ongoing COP29 coverage. But up next, I sit down with the Chilean climate minister, Maisa Rojas Corradi. So that is coming up next. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Baku. As leaders here at COP29 discuss a future for climate funding, U.S. President-elect Donald Trump's campaign pledge to withdraw from the Paris Agreement has loomed over talks. Earlier today, former U.S. Secretary of State John Kerry told Haslinda Amin at the Barclays conference in Singapore that such a plan would cede leadership to China.
If he pulls out of the Paris Agreement, another 195, 96 countries are going to continue to be in the agreement. And what he will do is cede, if he did that, he would cede leadership to China, the very thing that he says we don't want to do. And he would diminish the ability of the world to be able to respond to this existential crisis.
Well, joining me here at COP is Maisa Rojas, Chile's environment minister. So wonderful to have you with us. Maybe let's just talk about the deliverables that you're hoping to get out of this COP. It's been called the Finance COP. A target has been set. We don't know what that target is, but we do know that 100 billion is the floor of what we can expect out of the new goal. Where do you think we're going to end up with that number? And how realistic is it really that we're going to get to the $1 trillion that is necessary?
Okay. First of all, good morning. Thanks a lot for this conversation. Indeed, I mean, a conference of a party is always a place with many aspects, goals across the board. But indeed, this one, we really need climate finance so that we can urgently act with the urgency that we need to address climate change. Because countries have made their plans, they are implementing them, they need to address the causes of climate change through mitigation, but also the consequences that we are living through adaptation. And that all requires, of course, financing. So this is a very central part of how we implement the Paris Agreement. And I think it is very clear that we need public finance, and that public finance is anyway not going to be enough, so that we need other sources of finance as well. And I think everyone understands that. But at the end of the day, this is a process that is very much based on trust between the countries, and hence that developed countries have to deliver to developing countries so that they can implement the climate action is an important part of that trust process. So it's important that that part is there, plus the rest of it as well.
Can I just pick up on what you were saying about trust? What does the re-election of President Trump mean to the climate agenda, and also with respect to financing, specifically climate financing, as it pertains to helping the global south and emerging market economies?
Yeah. Well, it is it's democracy. So in that sense, it's the American people who elect democratically their leadership. The climate crisis, as well as the loss of biodiversity, pollution, are global crises that we have to address together. And hence it is important that every country is in, and the leadership of the US is very important in this process. So we're going to miss that leadership for the coming years. But we have also seen that in the case of climate change in particular, there's a real business case now for this transformation that we need in the renewable energy sector, electric vehicles, etc. So that part is already running and going, and I would not expect that to stop or move somewhere else. But for the help, of course, it is going to make an important difference.
Many delegations around the world were put off by some of the quite incendiary comments that the Azerbaijan president has made. I mean, on the opening day, he said oil is a gift from God. What message does that send to the world, given this is the #1 climate conference that's taking place and does take place annually?
We have to work with all governments and with all countries and with all their realities. That is the central part of this process, and that's why we have these meetings every year. And understanding the realities of different countries is part of that difficult and complicated conversation that we have. But all of us have signed to the Paris Agreement. We all agreed that climate change is going to have a negative impact in our lives now and future lives, in our economies and in the way we developed. Yeah. And therefore we decided back then that we are to transitioning away from fossil fuels, even if some countries, of course, will have a more complicated...
And being in government, when you're formulating climate policies, usually you come up with an array of different policy goals, whether they're subsidies, tax cuts, but also regulation plays a big role as well. How do you think about sort of the push and pull between wanting to keep innovation alive in the Chilean economy versus over-regulating and stymieing some of those efforts?
In the case of Chile, we have put climate change as a law. So by law, we are set that we're going to be carbon neutral at the latest by 2050 and resilient to the negative impacts of climate change as well. And we're using all the instruments. We have taxes, we have subsidies, we have regulations, and our energy transition, which is one of the most important transition is going in that direction. Chile is also a mining country, and we understand that there are many minerals, critical minerals, important for the energy transition that we are using. And there, for example, we are exploiting them, but with safeguards to nature as well, because we don't want to create another problem by trying to solve the climate crisis. So it is possible. There are ways to do this when you understand the big picture, which is that environmental degradation is, at the end of the day, a planetary problem.
Yeah, Minister, thank you so much for joining us. That was Maisa Rojas, Chile's Environment Minister. Now, coming up, polls close in Somaliland's long-delayed election amid its quest for sovereignty. We have the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, Somaliland has held a long-delayed election amid hopes the new U.S. administration will support its bid for formal recognition as a sovereign state. For more on this, let's bring in Bloomberg's Ndiro Oganga, who is joining us from Kigali. So, Ndiro, what weight does this election cycle in Somaliland carry?
Jen, it's a really important election. It's pegged on the independence of this country. This is a country that declared independence from Somalia in 1991 after a civil war, but they've struggled to gain full autonomy and also gain international recognition. This election is expected to be a really tight race between the two leading candidates. That's Abdi and Abdullahi, and he was the former Speaker of Parliament and has been very hesitant towards endorsing the Memorandum of Understanding between Ethiopia and Somaliland that grants Ethiopia port access in exchange for global and formal recognition of Somaliland. So whoever wins has a tough balancing act of maintaining peace in the region while trying to call the new U.S. administration for sovereign recognition.
And Ndiro, how does this election play into regional tensions? Is it likely to draw Somaliland closer to global recognition?
Jumana, that is what the leaders would like the people to believe. Both of them are really trying to court the U.S. administration. And the new administration is thought to be sympathetic towards them. President Trump withdrew troops from Somalia, a decision that was reserved by President Biden. But a former senior advisor in the former Trump administration believes that this matter could come up after inauguration for review, and a peaceful election could go a long way in making a strong case for policy review in favor of Somaliland. If the U.S. is to give them that recognition, we are likely to see more U.S. allies do the same. And also, U.S. will gain foothold in a very strategic region in the wake of threats from Houthi rebels in the Red Sea.
Bloomberg's Ondiro Ganga, thank you so much. Always good to have you on our show. Well, coming up, we speak to Israel's Special Envoy for Climate Change and Sustainability here at the COP29 Summit in Baku, Azerbaijan. That's next. This is Bloomberg.
This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks rise as traders boost bets on a December Fed cut following a subdued U.S. inflation report. Donald Trump wins the Republican trifecta, holding on to a narrow majority in the House. Meantime, there are reports Israel is rushing to advance a ceasefire deal in Lebanon as a, quote, gift to the U.S. president-elect. And we are live again at the COP29 climate conference in Baku with more conversations with leaders gathering there still ahead. Fortescue's executive chairman, Andrew Forrest, joins Jumana on set. Stick around for that. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zapasaja in Johannesburg.
And I'm Jumana Versace in Baku, where it has just gone 9:30 a.m. Welcome to the second hour and the second half of Horizon's Middle East and Africa. Jen.
Yeah, Jumana. Yeah, looking forward to those conversations you have coming up. Let's take a look, though, at where markets are positioned. We mentioned that yesterday was CPI day, coming in line with expectations. But as you can see from U.S. equities, facing a bit of pressure after closing near flat on Wednesday. S&P futures still over that 6,000 point, but down about 0.1%. Also, NASDAQ futures down almost 0.2%. Dollar strength is still in focus, as it has been since the U.S. election. And in particular, we've been paying close attention to what is happening with the yen, weakening further against the dollar. We're seeing levels there hitting levels not seen since July. And that dollar strength is really rippling across all of EM as we're paying close attention to it, with emerging market currencies really weakening and feeling the pressure since the U.S. election just over a week ago. Bitcoin, of course, is still in focus, continuing that relentless rally that we have seen. As you can see here, just above $90,000. But on Wednesday, we saw the cryptocurrencies surpassing 93,000, pulling back ever so slightly from that high on Wednesday, but still continuing that post-election strength that we've seen, and again, reverberating across to other cryptocurrencies. Let's check quickly on our terminal chart for today. We mentioned that CPI print. Markets now pricing in about an 80% chance of a December Fed cut, and only 3 cuts priced in for 2025. Now, what's notable is that we did hear, from Neil Kashkari saying that it was only an inflation print that could derail a December cut. So potentially this inline print still instills some confidence that we will see a cut. The question, though, is how sticky is inflation prior to this new administration coming in, and what could that mean again for the Fed's path? Let's check in, though, on how markets in Asia are faring. Avril Hong is in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, you talked about the yen weakness. We've been discussing today how it's been supportive for the stock gauges in Japan, the Nikkei topics, seeing a bit of green on a day where there's a lot of selling across the region. But I thought I'd offer another perspective of why we're seeing the gauges in Japan above water, so to speak. And that is optimism ahead of the Japanese mega bank earnings. We have Mitsubishi UFJ reporting due, and it is ahead heavy component of the topics. You get the sense that if these mega bank earnings come in, manage to beat the expectations, that could help to lift the broader stock market as well. And certainly that is the point being made by MLI's Mark Cranfield. This chart courtesy of him. Keep in mind that as far as MUFJ is concerned, the past 5 reporting seasons, it's managed to beat expectations. Overall, we are also seeing higher yields in Japan, and that's typically something that's supportive for Japanese financial stocks. Guys.
Avril, thank you so much. That was Avril Hong in Singapore. Well, it's day 4 of the COP29 summit here in Baku, Azerbaijan, where world leaders are working towards a deal to fund the battle against climate change. I'm now speaking to Ambassador Gideon Behar, Israel's Special Envoy for Climate Change and Sustainability. Good morning to you, Ambassador.
Good morning and shalom.
Thank you. I think many people, well, many delegations opted not to come to these climate talks. And perhaps a few people would be surprised that actually Israel are attending, given that it is a country at war. Can I just start off by asking you what deliverables you're looking to get out of this climate conference?
You know, instead, despite the war, we are part of the international community. And the greatest challenge or risk for humanity today is the climate crisis. And Israel has to be part of it. Israel has to be part of the solution to the climate crisis. And we are here to be part of the negotiations, but also to share solutions and ideas and technologies in the field of climate innovation, like mitigation and adaptation, so the world can have a better response to the climate crisis. If I can share with you, we have a delegation of 20 startups, really the top of the top, that are here, present in our pavilion, with amazing solutions. There is a startup, for instance, which uses coating that you can cover surfaces, and it cools the surface without using energy. There are so many other, there is another startup making or doing water from thin air. Amazing technologies, and we think that this is our main contribution to the world.
Yeah, so technological advances, but at the same time, war, in addition to, of course, the devastating humanitarian costs, also inflicts a lot of environmental damage as well. I mean, you look at the destruction and that's going on in the Gaza Strip and all of the areas of conflict. And how do you think about it from an environmental perspective and the damage that this is sustaining to the environment?
Yes, of course, wars are undesirable and they cause lots of damage, and we all are sorry about that. But I want to tell you that also Israel is severely hit, and there are severely environmental damages in Israel. For instance, all the bombardments of the Hezbollah on the north of Israel have caused huge fires. Whole forests went up, you know, just in smoke. Nevertheless, we must remember that who initiated this war and who imposed the war on us, it was Hamas that attacked us on the 7th of October last year. It's not Israel who started the war.
Let me ask you a question about the return of President Trump to the White House. First of all, from the climate perspective, there's concern that he may look to withdraw the U.S. from the Paris framework. Do you have concerns about what a return of President Trump could mean to climate policy?
I can tell you that from our perspective, we are going to cooperate with the United States in every aspect, on climate, on water, on agriculture, on renewable energies. This is our intention. The United States is Israel's most important ally. Israel and the United States entertain very close relationship, and we will continue to work in every aspect.
What do you think, from a political perspective, the return of President Trump to the White House means just for the possibility of peace and stability in the region? Obviously, he has talked about it. Do you believe that this is going to be an administration that will help Israel and the region get to that point?
Well, most definitely. In the past, we have seen that he initiated the Abraham Accords, our diplomatic ties with Gulf states, with Morocco, etc. And we hope that it will continue also during his second term in office. Definitely, we would like to enlarge our cooperation in the region and create more resilience, and to really, there are so many challenges in the region that deserve handling them together, like water scarcity, like food security, and more. And we hope really that with Trump we will be able to move into more closer cooperation in the region.
Well, assuming that the region does move towards that eventual goal, peace and stability, what would you say, coming back to our original discussion, would be your ecological and climate goals to help deal with the effects and the damages that were sustained by the ongoing conflicts?
Well, I mean, we have to work on creating a regional resilience to climate crisis. You see, the Middle East and the Eastern Mediterranean are considered the hotspot. Israel is part of it. The region is warming twice as much as the world average. So there is a great need to cooperate together and to work together, and this is our intention, and we are also trying to forward cooperation here in this conference, and also, on a routinely basis.
Yeah, just on water scarcity, because it's again a big theme also in UAE. You continue to see rising temperatures. What measures do you plan to take on dealing with the growing prospect of an increasing amount of water scarcity in the region?
It's a great question, because not only the climate crisis is deteriorating the situation, regarding water in the Middle East, also population continues to grow, and the need for water and new water resources is huge. I can give you the Israeli example or the Israeli model. We have developed a circular model of water economy. We desalinate in the sea. We use this water in the cities. Later on, we purify this water. 95% of all Israeli wastewater is treated and then used again for agriculture. This is a world record. We also lose very few percent of water due to leakages, and these are models that can be applied in the region but also worldwide.
Ambassador, thank you so much. Ambassador Gideon Behar, Israel's Special Envoy for Climate Change and Sustainability here at COP29. Well, we're going to cut to a break, but when we come back, we'll be speaking to Andrew Forrest, the Fortescue chairman. We'll be right back. Welcome back. We are live from Azerbaijan in Baku for the COP29 conference. Now, at last year's COP28 conference, Fortescue's executive chairman, Andrew Forrest, said it would be a failure if nations did not agree to phase out fossil fuels. The forum broadly did that with a pledge to transition away. However, over the last 12 months, there has been a boom in coal-fired power plants in China. I'm pleased to say that Dr. Forrest joins me right now. Really good to have you on the show. Maybe let's just build up on what you think progress has been since COP28. And of course, one of the signature achievements of COP28 was the language around fossil fuels. There are many caveats in that it has to be just in transition and orderly, but the language was included. Has there been enough progress on that front to phase out fossil fuels?
Look, there certainly hasn't. It's been all politics and not economics, which has slowed it up. I think if we could just call it for what it is, which is an energy transition no longer, because there's so much concern about that, which has been laced into the human psyche across the world by the fossil fuel sector. Let's actually cut to the chase to what it actually is. This is an economic opportunity transition. Fortescue's real proof, I'm sitting in front of you as proof that switching from fossil fuel to renewable energy gets you off that horrendous cycle of poverty and opportunity whenever it might suit some dictator who wants to invade a country or not, to just stable, low-cost energy forever. And that is, of course, renewable energy, and we're proving that at Fortescue every day.
Can I just ask you what you're hoping to get out of the deliverables of COP29? They've been calling it a financing summit. I mean, are you optimistic that we're going to get to a point where developing nations get the funding that is required to aid them with the transition?
Yeah, I actually am, but not for the direction we're on. Net zero, if anyone's tried to finance it, and I offer this to anyone who's trying to develop a green energy project throughout Africa, throughout the Middle East, Fortescue's there to help you because we will put on the table what bankers want. We'll put on the table what investors want. No one knows what net is. Is it carbon sequestration? Well, that's proven not to work. Is it carbon trading? Is it offsets? Or is it some other language which is going to get introduced between now and 2050 to suit some company?
Yeah.
No one knows. But real zero, where you just obliged to stop burning fossil fuel by a date, you can finance that. It's a hard number. This is what it will cost you to build your full replacement of fossil fuel. You can amortise that against the huge margin of this is what you'll save when you stop buying any fossil fuel, diesel, oil, gas, you name it. That margin is a hard number each year. You can finance that. That's real zero.
Can I just ask you about the mining industry in particular? How is the mining industry doing at reducing emissions and not just specifically Fortescue I'm talking about, the whole industry? Is there enough collaboration taking place?
Look, it's building up. Rio Tinto works well with us. And BHP is kind of wondering which way it's going to go. Vale really wants to go green and is just watching what they think is this grand Fortescue experiment as one of the biggest mining, most successful mining companies in the world.
Yeah.
It's not an experiment.
Yeah.
My message to all those chief executives is that we're saving money as we speak. We've moved from third lowest cost to lowest cost producer in the world. The iron ore price goes up or down, we'll still have the high margins because we're the lowest cost. That's thanks to renewable energy. That's thanks to our systems, which are rolling out right now. A $6.2 billion full decarbonisation program will save shareholders around $1 billion a year forever.
Yeah.
That is a fabulous investment.
What I've seen happen with many companies, not just specific to mining companies, but you talk about the energy sectors, they set these targets and they're very happy setting these targets and announcing these targets. And then what happens is a couple of years later, they have to dial them back.
Yeah, because they don't do the work.
But isn't it better to be more pragmatic with where you can get to in an achievable fashion than promising these lofty goals and dialing back on them several years later? Isn't that what's happening to the mining industry now?
It isn't better to be pragmatic. It's better to get a better chief executive. That's what you need. I mean, when people start dialing back because they say they can't do it, agree with them and just say, as shareholders, we agree you can't do it. Let's get on someone who can. Yeah. Because we're watching Fortescue, and Fortescue are doing it. Fortescue are saving money as we speak. Fortescue will save $1 billion a year on only a $6 billion investment. They've looked at hard. If they vertically integrated, like we're doing, we're going in energy, right? We're going to be a huge energy producer now. If we vertically integrated with fossil fuel, it wouldn't be 6.2 billion. It would be some rubbery number around 17 to 19 billion.
Yeah.
When you get given a rubbery number as a board of directors, you know it's just going to go up. We've got a hard number on renewable energy. We've got a hard number on how much money we're saving. And I'm saying if chief executives don't follow that example, their shareholders are going to say, you're right, you can't do it, get off stage.
What happens if, to use your term, the new CEO, the chief executive of the United States, the new president comes in and pulls the U.S. out of the Paris Accords? What happens to all of these climate efforts?
Well, I don't think anything happens. This is an economic transition. In Paris or not in Paris, I can just say that president-elect is a business person. He can see that if you invest and trigger all the policies to really get fossil fuel cranked up for new investment, forget about maintenance of these old rust buckets, these new investments, you're going to get to a total of around 600 billion over his term. If you go renewable with all the policies in place, you're going to get new investment of about 1.6 to 1.65 trillion. There's $1 trillion margin you're going to withhold from the American people. Hey, let's just do the numbers, right? He's going to follow the money. He's a pragmatic president.
Yeah. What happens if he starts imposing tariffs on countries all around the world? What does it mean to Australia? You know, if you think about the trade protectionism movement that's going on around the world, how is that likely to impact the outlook?
Well, look, in the long term, it just makes America less competitive. We're big supporters of America. We're investing heavily in America. We're looking at the change in presidency. We've always said we're going to work with whoever the American people elect. But I am saying The reason why we're doing it is because this is a highly economic opportunity which we're taking, and if the President of the United States thinks, well, drill, baby, drill, he's just forgetting that that's 200 years old. Look where it's got us all. A very volatile energy price, an uncertain energy future, erratic standard of living because we've got an erratic cost of energy. Let's go build, baby, build. Let's build out these renewable energy systems. Let's give the American people the lowest cost of energy. Let's give companies who invest in it high margins. Let's not stand in the road of that future.
Great. Well, build, baby, build. Those are the words of Andrew Forrest, the Fortescue chairman. And coming up, we're going to continue the conversation here in COP29 and talk about some of those financing goals. What are the sticking points, and will we actually achieve some of the targets? We'll be right back. Well, it's been a busy time here at COP29 in Baku, with global leaders proposing new funding sources to combat climate change, including taxes on fossil fuel emissions, levies on stock and bond trades, and more expensive business class flights. Let's get more from Bloomberg's Will Kennedy. Will, it's great to have you on our show. Usually we're not in the same time zone, but you've been tracking the ins and outs of all of the conversations going on here. How much progress have we made this week on these financing talks?
Well, typically the first week is about the leaders' summits, where we have people fly in from around the world and sort of make impassioned speeches about what they'd like to happen. That's happened now. It wasn't as busy as Dubai. A lot of people were absent. And now for the next 10 days or so, we'll be into the really nitty-gritty of hard negotiation, trying to work towards that finance goal at the end. I think we know a couple of things already. First, this is all about finance. Yeah. The success or failure of this COP in Baku will be judged by whether we get a new finance deal to replace the $100 billion a year that had existed since the Paris Agreement. Obviously, developing countries are looking for many multiples of that. Developed countries faced with unhappy electorates, with stretched state treasury budgets, are not going to be there. Can we find somewhere to meet in the middle?
Yeah, one of these signature announcements that came out, I think, on the second day was the carbon trading mechanism. Is that actually a significant breakthrough?
I think so. They've been working on it a long time, and I've been to 3 COPs in a row now where people say, should we get Article 6 done? And it doesn't quite get done. I think the expectation is it will get done at this COP. That's clearly what the presidency wants. And I think it matters because it's important going to the Brazil COP. One of the things it will enable is forest nations like Brazil to sell carbon credits based on not chopping down the forest, and in a way protecting the forest to be an economic gain for countries like Brazil. And I think they would say that's really important if we're going to arrest deforestation and maintain those carbon sinks that are so vital to keeping climate change in check to some extent.
About a minute, Will. Is it ironic that there are representatives from fossil fuel industries here? I mean, we're speaking to the CEO of ExxonMobil. What is their role in all of this?
I mean, I think you can look at it both ways. A lot of people here would tell you that it's awful that this guy is in COP, that it's like inviting a climate criminal to climate talks. But on the other hand, I think it shows you that COPs really matter, and that someone like Darren Woods feels he has to be part of the conversation. And I think it shows that despite the fact that we're not where we need to be, despite the fact that we're failing to meet our targets, everyone agrees that these climate talks really matter and they want to get their perspective across.
Yeah, let's see. Well, it's certainly been a very busy couple of days for us. That was Bloomberg's Will Kennedy, and I think you're here for the long haul. There's still another week of COP going on. But that was it for Horizons Middle East and Africa. We hope you've enjoyed our coverage the last 4 days in Baku. I'm Joanna Versace. Stay with Bloomberg, because coming up next is Daybreak Europe. This is Bloomberg.